Deven Choksey as well joins us on the show. Hi Deven, thanks so much for joining in. Well, HDFC, the big boy was called up by the Nifty and it's delivered because that's moved to the high point of the day. Have you had a brief look at it? We have the net profit number coming at around 4,425. Total income up by close to around 35%. NIs as well, much better than what our poll threw up. It was better by close to 250 to 300 crores. No complaints, it seems, with regard to those numbers. Your view on the stock?
Hi Nigel, good afternoon. Well, from the limited numbers which have come up, definitely the results are better than the expectations for sure. And I'm not completely surprised though, because all along every month-on-month basis, I think we've been experiencing the numbers on the housing finance side, the loan book. And as a result of which, we find that I think the loan growth is remaining absolutely strong and convincing. Given the kind of a strength in affordable housing finance, given the kind of strength in the retail lending in the housing finance, I believe that the company probably has a much bigger numbers to achieve once they probably start getting the advantage of the combined books with HDFC Bank. On the liability side, I think when the cost of fund comes down, possibly the ability to lend further with higher market share and at the same time, I think with better margin is going to be, I think, significantly higher. So at this point of time, I believe that I think though it is still a few months or few quarters away, till the time I think they get a complete advantage of the merged balance sheet with HDFC Bank, I would think that I think this is a story which is going to grow much faster and much bigger in subsequent quarters, given the kind of advantage that they would have on the low cost of funds that they would be having through the merged entity. At the same time, the investment value of the listed companies, which is HDFC Bank, HDFC Life, and AMC, I think it's really in more than around 50 to 53% of the total market cap of the company, which I believe I think is once again a trigger point because each of the listed subsidiaries are showing relatively better signs of growth going forward, and given that kind of possibility, we are likely to see higher amount of contribution coming in from them as well, as far as I think the book values are concerned. So from that point of view, I believe that I think the story is becoming much stronger. We are probably, I think, looking at least 15% kind of an upside from current levels going forward in the next 12 months.
Okay, by the way, HDFC Bank and Reliance, these three names are contributing about 50 index points to the 100-point move that we have on the Nifty right now. But Mitesh is with us as well. Mitesh, they're coming to you a little late, but we've got a rally. Actually, you know, the market looked good right from the word go, right, in the morning. Constructive, slow, steady, but very sturdy, reliable kind of rise. Nothing in fits and starts. What would you do now, Mitesh?
Afternoon, Prashant. I think one, I was expecting that, there would be some consolidation given that we were slightly overbought and I was hoping to buy at lower levels. That hasn't played out, but in case you have long positions, I think 18,250 still remains an important pivot for me. Would expect some kind of profit booking happening over there. Suggest that, take at least partial profits and then trail a stop loss about 18,150, and these are spot levels I'm talking about. Having said that, on the stock side, Muthoot is something which is a buy. That's given a good price and volume breakout. So here I would recommend a buy with a stop below levels of 1,030 for targets of 1,090. And the Petronet, I think, has broken down with a gap and is slightly negative on the chart. So keep the stop at 230 here. Look for targets of 217 on the downside.
Deven, any thoughts on Dabur? Anyway, the street wasn't expecting fireworks. We know about the rural stress. But there is that disappointment that we are seeing on the margin front. Is this the right time to look at Dabur, or you would wait it out to see how the rainfall, the monsoon plays out, because there is that worry about El Nino?
So I think that worry may continue, I guess. I think we are not going to see any different picture than the worry, frankly. I think till the time the monsoon sets in, I think we get good news. But I think having said that, I reading says that I think most of the raw material or the input prices are under control, and has also experienced from other NBFCs, other FMCGs rather. I think they have been, I think, relatively more steady on the margin front. In my viewpoint, I think Dabur could possibly see in subsequent quarters relatively stable to better margins. And that is where probably, I think, the penetration into the other than the metros would probably help them. in my viewpoint, I think the worst seems to be factored into the price as I see it. I think from the point of view of looking at the future investment, maybe I think one could possibly see gradual increase once the validation on the numbers also comes up. But yes, I think downside seems to be limited at current levels.
All right, Deven, stay on. We'll just get to the bottom of some of the numbers that have made the headlines today. By the way, Bajaj Finance is also really surging away. It is the big winner on the Nifty right now. And it along with a couple of other NBFCs, actually, stocks doing really well. So Bajaj is the one that is on the spotlight. There we go, the big winner. Nifty mover, actually, the top gainer on the Nifty right now. But we are going to stay with financials and get to the bottom of some of the details there. Today's been a good day. I mean, whether it was Chola Investments, stock is still up by, I think, 6 to 7%. And then, of course, these big numbers from HDFC. Let's go across to Abhishek for a lowdown. Abhishek, good day for financials.
Well, to begin with Cholamandalam, it was a record-setting quarter in terms of especially the loan growth on a YOY basis at 36% is the highest that you are seeing in last 27 quarters. This was led by the fact that disbursements were pretty robust, growing at 20% on a sequential basis. Disbursal to AUM ratio has also declined a bit to about 42-43% from 68% that they had in the previous quarter, which was on exaggerated level. It needs to come down to around 33%, 35% for normalization. 8-quarter low in terms of gross NPA and net NPA ratio coming in at 4.83%, 4.63% and about 3.11% respectively. They have reported highest ever quarterly operating profits coming in at 1,276 crores. So the new business momentum that has been gaining traction over the last couple of quarters remains robust in terms of growth, largely made up of the SME portfolio over there. And cost to income ratio is one of the lowest in last 5 quarters, coming in at 39.2%. So P&L both in terms of NI and PAT, it's a beat on our poll. Brokerages remain upbeat. The only worry factor for brokerages is that they want to see the promoter dispute to be resolved in a peaceful manner so that there is future re-rating of Cholamandalam. So across brokerages like Macquarie, they remain bullish on the stock with a target price of 860 per share. You also have JP Morgan, who have double upgraded the stock to overweight from underweight, and they have increased the target price to 1,020 from 700 earlier. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Chola's numbers look very, very good. By the way, keep an eye out on Manappuram. Now, there's a clarification that's come in with regard to the ED's ongoing search at the registered offices of Manappuram. They are giving out some clarification out here. They're saying it's mainly with reference to deposits that were accepted by Magro, that's Manappuram Agro Farms, which is an erstwhile sole proprietor of the concern of the promoter prior to 2012, which was subsequently repaid, except the deposit of around 9 lakhs. So the quantum is appearing a little bit small out here, and there is some clarification that's coming out here. Remember, yesterday the stock took a hard knock, but at least as of now, going by the clarification that they put, this number is looking a little bit small. So I think that's why we're seeing a bit of a recovery on the stock. Just keep an eye out on that. We'll try to pull in the management as well to get further clarification. But this is what we have as of now. And this is the first official comment that we're getting with regard to the ED searches at their office. 2 points. One, it appears like the amount is small. And in fact, it appears that this is for many, many years prior. So I just thought we'll point that out as well. But I think in the studio, you'll want to make a point.
No, could you pointed this out? There's some recovery, Nigel, on the stock that we can see. It's trying to climb its way back up, and it is already positive. So we'll keep that on the radar, because otherwise Manappuram was sitting out of the rest of the NBFC rally for those reasons. But Deven, just to come back to complete this point, I mean, you were speaking about HDFC earlier. Chola has had pretty phenomenal numbers as well, and even a couple of the other NBFCs. I mean, in general, across the board, we've seen pretty strong, robust growth, record high margins for most. So tell us, what would be your best pick within the NBFC universe and also banks? I mean, we've got blowout numbers from ICICI Bank, Kotak Mahindra Bank. Even if you look with a magnifying glass, it's tough to find a problem anywhere, right? So tell us your favorite bank name and the non-bank stock that you like.
So we continue to like Surabhi, the businesses and the retail lending. And I think NBFCs like Bajaj, particularly, I think remains the favorite of the lot. At the same time, because Bajaj also has the housing finance portfolio in its subsidiary, so that I think also reasonably grows reasonably well, along with I think other housing finance companies like HDFC. So I think that remains, I think, literally more convincing. What we want to see is, I think these companies are also having the ability to have a stronger ability to, I think, raise money at a competitive cost. And as a result of which, I think they're in a position to maintain the margin. Plus, given the size of the book, particularly likes of HDFC, you are also seeing the repricing of their assets. So that is also, again, becoming, I think, a more important play when you are looking at maintenance of the margin. From that perspective, these two NBFCs stand out very clearly in our portfolio, and we remain invested in these companies. As far as banks are concerned, I think the clear conviction stays with ICICI, largely because of the fact that the CASA ratio remains, I think, extremely convincing, and it remains at a sustainable level at a higher levels. At the same time, I think the retail credit growth is continuing to grow. And fortunately, in last few quarters, we are seeing, including for HDFC, the corporate loan book growth is remaining relatively more stable. So corporate sector banks remain largely favorite in our portfolios, and we continue to hold them.
Okay, do stay on. Need to slip into a very short break. On the other side, we'll talk more stocks. We'll also invite our Alpha manager for the day, Anshul Sehgal of Kotak PMS.